Now let's go into one more, a little bit of an extension of this topic on prop trading objectives. We'll do a part 3 here and we'll wrap up this discussion because I definitely want to get into a day where we're actually taking trade activity. I go through some scenarios and tie it into everything we've been talking about. So let's take a day where at 8:32 U.S. Central Time, approximately 2 minutes after the U.S. session open, that first 2 minutes is played out. There's our 8:32 or later. The first bar close, that's at 8:32 a.m. or later, and you have your time window set on the pivot point trading. We got our PPG1, which just stands for Pivot Point Group 1 indicator. It's the solid line indicator with the green dots and the red dots. You should already know what that is from training on the actual indicator system side. But let's go into strategies. And let's say I'm going to attach a strategy, or I had a strategy attached on this particular day. And in here, let's say, I'm trading a smaller account, so I'm going for 2 contracts. I'm going to have a stop in ticks. Everything is always in ticks, not points. I'm going to put a target like way far away, just in case I get in and the market takes off. So 160, the market gets to 170 ticks in the money. My stop, that's minus 160 ticks from my actual fill price, will move then to break even plus 5 ticks. So that's a free trade then. And then there's no need for me to run the trail stop loss, bar advance, trail bars. That'll be, that's covered in a separate video. But let's say I'm going for 250, and let's just say I'm going to go for 300 on the day. 300. Okay, daily loss limit, I want that to be its own discussion because the daily loss limit, I'm going to cover what you need to be aware of when you set your daily loss limit right now. But here's what I want to get into. For the PPG1 indicator that talks to this pivot point strat to tell it when to sell on red dots or when to buy in green dots, and then the automation handles all your entry and in trade management. We have two modes. We have a time window mode. The time window mode, as covered in the training on the pivot point strategy itself, is all about whatever I set my time window to. And this is central time for me. So whatever's on the bottom of your chart, I'm on central time. That's what you need to have tied to or set up in your settings. They need to be in alignment. So at 8:32, the first bar close that happens at exactly 8:32 or later, in time windows mode, I'm saying, get me in right away if the entry criteria are in place or later. And sometimes it'll get you in like right away at 8:32. It'll get you in a bar like right away. Everything's in alignment to get you in. Then what happens, the sequence is if you get into a time window trade, that's a one-time event. You're only going to have one time window based entry. Then your next entry would automatically be, if you're still in a trade and continuing to let the automation run, is it will then take the next signal, the actual signal that fires, one of the dots. So a time signal entry has nothing to do with the dots on the PPG1 indicator. I'll cover what it does, what does trigger you into a trade. But then if you do get a dot, it will flip you and flip the trade from one direction, which we're going to cover in this case, where we're short initially. Then it flips us to long. Then we get another signal. It'll flip us into a short. The automation then from the initial trade entry, which was on a time window entry, will then sequentially take the next signal entry, then the next signal entry, and so on until a daily loss limit's hit, until a daily profit objective is hit, or until you've hit the flatten button and clicked on the off button for the buttons that we always have on strategies to turn them on and off. So in this scenario, and this is what you have to take into account for where should I set my stop in relation to my daily profit objective. On this particular trade, and I picked this day on purpose, right out of the gates, we have a down move. The PPG1 is down, leading into the 8:32 time window. So here's 8:32 exactly, and some change on that actual bar close. And let's go do a time hack. So right here, it's 8:32 and 28, 1/100ths of a second. So we're in. The PPG's down, and I got a down closing bar. That's acceptable conditions now to enter a time window trade with the pivot point strategy. So we get a market order fill. We have our stop up about 160 ticks, roughly, right about there. So we're in the trade. So everything's been down, right up from 8, pre-market, 8:30, 8:31, 8:32, and change. Everything's down. The PPG1's down, triggers me into short. Doesn't hardly get any ticks lower, and that baby stops and turns around on a dime. And that can happen out of the open. So, hey, that's part of the game. The market can do whatever it wants. So eventually the market comes up pretty quick, blips us out. So you're now minus one full stop out, and you're going for $300. So let's do that. You got 160 tick loss on trade 1. Trade 2, the next trade, the automation's still working, puts you into a long trade right here. We get a signal. So the first entry was time window. The next trade, any signal that comes up, as long as the automation's still on, it now triggers you into a brand new, fresh long trade. Stop at 160 ticks, goes up to 170 ticks, hits my break-even threshold. My stop goes to break-even plus. Market comes down, blips me out, no loss. So I have a scratch. So it wasn't plus or minus, it was a zero trade. Okay, so we had a long here, started to run in our intended direction, negated all the loss we had in trade 1 and was running, but then market turned around. Oh well. The market came down, hit our stop right in here. Break even plus, so we still are holding that initial 160 tick loss, made nothing off trade number 2. We didn't lose anything. Then we get triggered into trade 3. So now we're in trade 3. We got the stop, 160 ticks. Now that baby starts running. The market starts to break out of its opening range. It's breaking through. Now we're at a point right about here. We've already negated our first loss. We didn't make anything on trade 2. Now we're getting into positive P&L on the day. I'll just let you know something. If I see a market flipping back and forth, and this is like trade number 4 for me, and I'm finally getting some positive P&L, on some days I'm so focused on progress over perfection. Like if this is trade 4 and I'm finally getting positive, I watch it like a hawk, and the second I see it stall out or I get a counter diamond, I just go hit the flatten button. Bing, I'll flatten it. That's just me. I'm so into just, hey, grab a little profit today, and then I'll wait and I'll see if the market goes to a key level, then I'll turn the strat back on. But I'm advanced. For you, I don't want you having to think about that. You're in it. Now this one happens to be trade 1, trade 2, trade 3. Trade 1 was a loser. Trade 2 doesn't really count. We didn't win or make anything, so it's kind of like not even a trade. So really, I had one trade I lost. The second trade means nothing to me. The third trade is getting some traction. So this is really kind of like my trade 2. Because trade, the real trade 2 was like inert. It was like sniffing some oxygen. Didn't help me, didn't hurt me. The first one I was sniffing carbon monoxide. Trade 3, hey, I'm getting to that oxygen. Woo, it smells good. And then that baby starts running. So I'm leaving the automation alone. And then what happens from there? It keeps going and going. And then guess what happens? Your $300 profit objective, I don't know wherever it would be, gets hit and you're done for the day. That's the mode you want to get into. You want to get into letting the automation get you to the promised land. Yeah, you were a little nervous and you're biting your teeth and you canceled the order for your 911, twin turbo all-wheel drive. Maybe you put an order on for a new Honda Prelude, the new body style that's coming out that's going to be slow and boring. You're kind of dropping down your expectations. But hey, it worked. You let the automation do its thing. The nice thing about the market and trading this style on symmetrical Renkos, the market might be indecisive a bit, but when it opens up its range, boy, does it give you some beautiful swings. 99.5% of the time. Is there 0.5% of the time the market will junk around during the day? Sure, we get days like that. I'll show you one here in a second. That's what your daily loss limit's for. Go bang, made nothing, bing, made nothing, bing, bang, couple of those, and then you hit your daily loss limit. Oh well, next, go to the next day. Don't come in and cry to Chris and say, hey, what settings do I need to be on, all that. Just stick with whatever we got in the getting started section or in the settings section. Stick to it. This isn't, you got to be perfect every day. We want to be good enough 16, 17 days where we don't care about the 2, 3, or 4 days a month where we get ping-ponged a bit to the point we've already hit our stop limit. So why am I talking about all this? Your daily loss limit. I always trade the setups on very minimally optimized settings. Like I don't spend like months trying to figure out optimization. I get something close, I turn it on, and then I work with it. So for me, just, not hypothetical, but just me, not what you should be doing to start. If I'm going for 700 a day on 150K accounts, I don't mind for myself personally risking 900 on a daily loss limit. And that might be trading 4 to 5 MNQs. I'll be honest with you, I'm advanced. I come into a day, and if I have a gut feeling it's going to be very reactive out of the open, I'm always on 5 MNQs. If I come into the day, and let's say between the last trading day, the upper range of price is way up here, very defined. The lower range of price is very defined. And 110 points up and 130 points down, we're going to open one day right in the middle of the range. Maybe especially like on a Monday, I'm going to go 4 MNQs. I'm going to tone it down. The markets might need a while to figure out which side of the range it wants to go to. That's the biggest thing I look for. If I see the market smack dab literally in the middle of a recent range, I don't like that. I like markets when they're closer to the upper range out of the open or closer to the lower. So this is where our new levels tool that we'll be deploying to the group comes in. If I see in the levels tool, I got price up closer to that area, I'm going to be on the heavier size of my typical daily position size. That's why I say I trade 4 or 5 contracts. Now for you, as a beginner, just trade the same amount all the time until you're getting to that 16 days. So if you're on a 50K account and you're trading 2 MNQs, I don't care where the market's at. I don't care what day it is. I don't care what news is coming out. Trade that 2 MN contracts every day like clockwork. When you're doing 16 days a month profitable and the rest some scratch or losers or 16 days or more, then you can start massaging position size and working up from your current daily profit objectives. So that's what I do for a 150K account, and I'm very comfortable. My thought is when I can really get on the proper tool, because NinjaTrader is horrid at backtesting and optimization. It's just too old of a platform and it doesn't have a good enough of an optimization engine. But now where I'm going to start playing with the TradeSaber Predator tools, connected to the outputs of the indicator and the signals, where I can go in and really start doing some deep dive optimization, I might get to a scenario where I'm going for, maybe 700 a day, and maybe my stop is only 750 or 700 even. I might be able to get there. I don't know yet. I don't need to. I'm doing just fine going for my 700 and being willing to lose 900 on losing day. So what you want to do, though, at a minimum, you want to be able to take at least, a loss or two right out of the gates on the worst days, and maybe a little additional excursion against you before you get a run in your intended direction, where it maybe trade 3 finally works out. You got to be able to absorb that in what your daily loss limit is in total, in amount of ticks, in relation to what your profit objective is. So, that's fine to have your daily loss limit slightly higher than your daily profit objective for this style of trading, for what we're doing, because our bias is to be on optimized settings that will get us at least 16 winning days a month at the point you're doing everything right. You're not making mistakes in the automation, and you're not, doing stuff with the automated that you're not supposed to be doing. You're often left field trading like 7 lots on a 50K account, trying to see if you can get done in the first 4 minutes every day. That stuff, you're on your own, good luck. What I'm talking about is just following the plan. So here, a few flips back and forth, the market, the majority of the time, like, way over 88, 90% will give you one move that can get you to your daily profit objective. And the lower that daily profit objective is, it doesn't take but a little getting positive on one move, and maybe it flips to the one more move that gets you that little more of an extended move to get you where your daily profit objective is hit and you're now done for the day. And then learn over time to shut it down, be happy with that, and be ready for the next day to execute, turning on the strategy and all that. And then when I'm done trading with my strategies, I never leave an automated strategy ever attached to my chart. I remove them. I don't want to have anything bite me that's preventable. So if I leave the automation attached and I hit the off button, it's on. It's still attached to that chart. Who knows what could happen, where it could take a trade that you don't want. Don't do that. Just pull the strategy off the chart in the beginning while you're building this capability. When you get more advanced, do whatever you want, because there you've proven that you have a capability, that you're doing precision operations and not making mistakes that are triggering you into trades accidentally or unwanted. Does that make sense? So there we've covered trading prop. What are the objectives in a 3-part series? Covered a lot of material. I'll continue to cover more material on this in additional videos, but this should be a really good primer to get you to be aware of what you got to do to trade prop, what the possibilities are, and what are some good initial, I guess you could say, objectives to go after and be aware of as you start trading automated. So there you have it. At any time, questions, info at proptradingindicators.com. And hey, more good stuff ahead.